Hi, I'm Ross Barry, Chief Investment Officer for Spirit Super. In the current environment, it's easy to feel like a small boat on a big ocean in the middle of a perfect storm. In the past 2 years alone, the global economy has been rocked by a global pandemic, global supply chain disruptions, a resurgence in inflation, and now a major conflict in Europe. Naturally, many of you will be feeling a little anxious. But it's not all doom and gloom, and long-term investing is about navigating through such times and winning the long game. And with that in mind, we'd like to update you on how the fund's investment portfolios have been performing and set out for you some of the important steps we've taken to keep your savings safe. Firstly, looking back at the performance up to 31 December, Spirit Super continued to deliver very strong returns across all its investment options. The MySuper Balanced option delivered over 13% for the year, and it has now delivered roughly 8.5% per annum for the past 5 years. Our Growth option delivered a return of just under 17% in 2021, and over 10% per annum now for the past 5 years. Even our most defensive option, the Conservative option, delivered 5.8% for the year and has returned members around 4.7% per annum for the past 5 years. Now, as good as these results are, we don't expect them to be repeated in 2022. Having recovered strongly from the onset of COVID-19, global financial markets became unsettled late last year by the re-emergence of higher inflation. Bond markets, often seen as a safe haven asset class, sold off as economists began to predict a sooner than expected rise in official interest rates. Against this backdrop, global share markets have also become very volatile. Recent selling has become more broad-based as corporate earnings have been impacted by an extended period of shipping backlogs and shortages in labour and critical inputs like semiconductor chips. Last week, the invasion by Russian military forces of Ukraine caused fear and anxiety across the world and compounded this uncertainty in financial markets. Like you, we've been disturbed and deeply saddened by developments in Ukraine, and our thoughts are with the families of all Ukrainian and Russian people who will inevitably suffer from the tragedy unfolding in Eastern Europe. So, how are we responding to these developments? Well, first it's important to note two things about managing risk. The first is that markets are complex. They don't always react to news and events the way you might expect. And the second is that the middle of a market dislocation event like this is rarely the right time to de-risk portfolios. A good risk management system is one that is forward-looking and seeks to reposition portfolios in advance of such developments. And this is exactly what we've been doing. Over late 2021, the Spirit Super investment team shifted our premix portfolios from a slightly risk-on posture to a more defensive one. Some of the steps we took were to unwind a prior overweight to growth assets such as Australian and global shares, to establish a significant short duration tilt within our fixed income portfolio. This means reducing our exposure to rising interest rates, to reduce our exposure to international credit risk and redeeming most of our exposure to emerging market debt. We also redeemed from a number of more highly leveraged investments and projects with lower quality assets or significant development risk. And we increased the overall liquidity of our portfolio through the exit of several non-core illiquid assets. This will increase our ability to respond as the outlook evolves, including to take advantage of new opportunities if and as they arise. Now, these revisions have served us well. But even more fundamentally, Spirit Super has been particularly well served by the way we diversify risk across a broad range of asset classes, industries and market sectors. In other words, we have not put all our eggs in one basket. We've also been committed for a long time to building portfolios of high quality property and infrastructure assets with strong economic fundamentals, robust cash flows and very solid counterparties. This is well reflected in our recent acquisitions of Parliament Square in Hobart and Geelong Port in Victoria. Now, coming back to the conflict in Ukraine, the investment team has kept a weather eye on our direct holdings in Eastern Europe as the conflict has emerged, including through regular dialogue with our investment managers. And we can report that as of 28 February, across our international shares portfolio, our exposure to Ukraine and Russia is virtually zero. We have no direct property or infrastructure investments in that region, and across our international fixed income and credit holdings, our managers also report negligible holdings in Ukraine and Russia. And while we don't like to focus too much on short-term movements, we do want to share with you how our portfolios have performed in more recent times. And as you can see, recent returns have been slightly negative, but as this chart shows, the extent of losses has been very muted. And this is for all of the reasons I just spoke of. We emphasise that these are just short-term movements, and short-term volatility is always a feature of growth-oriented portfolios. Now, some of you may be thinking about whether you are in the right investment option. It's always recommended that you consider any such move carefully and seek professional advice before making a decision. You should always consider factors such as how long you are investing for, your personal tolerance for risk, and the part your super plays in your overall retirement planning goals. Now, please visit our website or reach out to our contact centre if you'd like more information. We hope this update is helpful. Spirit Super is committed to being as open and transparent as we can about the management of your retirement savings, and we will provide further updates like this one over coming weeks and months. Take care, and we'll see you again soon.